Welcome back. Now to our next conversation. Well, over the weekend, we got the news that President Tinubu suspended Mr. Gordon Emefiele, governor of Central Bank of Nigeria. Let's talk about the expected impact for financial market. Now, joining me is Kelvin Emmanuel, CEO, Derry Hills from Abuja studio. Great to have you, Kelvin. Happy Democracy Day.
Thank you so much, Ladi. Good to thank you for having me. Happy Democracy Day to you too.
Thank you. So, Mr. Emefiele's tenure was supposed to end in 2024, and now the governor suspended. And we know historically, central bank governors and government usually have some kind of friction. But how do you see this suspension impacting financial markets in Nigeria, especially the naira?
Well, I think the impact is going to be positive, considering that the central bank has been in dire need of house cleaning for a number of years. When you look at the 5 functions of a central bank, number 1, to maintain price stability. Number 2, to ensure the soundness of the financial system. Number 3, to issue legal tender. Number 4, to manage the external reserves. And number 5, to advise the federal government, according to sections 2 of the CBN Act of 2007. This is the metrics on which you score Godwin Emefiele, that has been the governor of the central bank for 9 years, and that was supposed to finish his second term of 10 years in 2024. How has he performed? He's performed woefully, because when you look at the exchange rate, when you look at the soundness of the financial system, you consider the fact that Godwin Emefiele operated an expansionary monetary policy that basically gave the federal government the leeway to violate the Ways and Means provision in sections 38 of the CBN Act. And what he did basically was he took monies from the banks, raised the cash reserve ratio, the non-discretionary cash reserve ratio, also engage in indiscriminate debits of Nigerian banks through discretionary cash reserve ratio that brings the both non-discretionary and discretionary cash reserve ratio to somewhere between 41 and 43%. Then raise the loan deposit ratio of the banks and then fine them for not meeting up the LDRO targets. And then also required that they keep their their impairment losses, their non-performing loan book between 4.8 and 5.6%. Squeeze the financial system. And then, as inflation kept creeping up because you're squeezing the credit market, and you also have a situation where violation of Ways and Means affected the naira and led to depreciation and corresponding devaluation, you kept hiking the rates, and you have a situation where you're saying they should not raise non-performing loan book higher than 5.6%, but you've placed them in a situation where the credit they gave to businesses, because as the interest rate keeps going up, dependency on existing loan keeps going up, increases the risk of default from those businesses. So Godwin Emefiele, based on the the second metric for the mandate of the Central Bank of Nigeria, which is maintain, ensure the soundness of the financial system, failed woefully.
Talking about
price stability, which has to do with monetary policy, he has done very, very, very poorly, because you've seen inflation go out of control, and you've seen increase in the MPR to 18.5%. That is made a situation where we have commercial lending rates at somewhere between 28 and 31% today. So on
Kelvin,
the fifth metric of the mandate of the Central Bank of Nigeria on advising the federal government, he has not done well.
All right, Kelvin, you did say that he performed woefully on those metrics, but let's look at the interventions now. He did intervene a lot in the agricultural sector and manufacturing. Does that count for anything? All those massive funds.
It's very interesting you brought up the issue of the interventions, because at the last Monetary Policy Committee meeting, where they hiked the rate by 50 basis points, he mentioned that they had given out 8 trillion naira in direct intervention programs. The question I have is, what has been the impact of the 8 trillion naira, especially on the Anchor Borrowers program that has a 75.4% impairment? I mean, there is a standing rule in the BOFIA, and that has been gazetted by the central bank, like I said earlier, that says non-performing loan book. In fact, you could see that when the First Bank of Nigeria had non-performing loan book at 28%, it led to the central bank sacking the board of both the First Bank Holding Company and First Bank Nigeria Limited, a few years ago. So if the central bank is telling the banks that they cannot have impairment more than 5.6%, how come their regulator has impairment of over 50% on direct intervention programs? Anchor Borrowers Program has an impairment of 75.4%. What is the Development Finance Department of the Central Bank of Nigeria doing? What is NISAL doing? NISAL is supposed to manage risk for giving out of direct intervention loans. How has Anchor Borrowers Program, how has Presidential Fertilizer Initiative performed? Woefully. So if your recovery rate is 24.6%, it clearly shows that there are questions to be answered in terms of the metrics on which the loans were given, who the loans were given to, why Godwin Emefiele, since 2019, stopped publishing audited financial statements to the Senate in line with Section 51 of the CBN Act of 2007, and consequently stopped gazetting the published audited financial statements of the central bank in line with Section 53 of the CBN Act. Because if he was publishing audited financial statements to the Senate from 2019, the Senate would have seen it and would have flagged it, right? It's preposterous that we have a situation where there are trillions of naira of impairment on the balance sheet of the central bank that is supposed to be the apex bank and that is supposed to maintain price stability and soundness of the financial system. And instead of the Senate to investigate and probe how these monies were spent and order for a forensic audit and ensure that this doesn't repeat itself, the Senate and the House of Rep rushed hurriedly and passed the securitization of the Ways and Means, because the direct intervention programs is inclusive in the Ways and Means. The 23.7 trillion naira that was passed as sterilized loans that the federal government could not pay is part of the monies that were given in direct intervention programs.
Yes, Kelvin. So Kelvin, so much to unpack there, Kelvin. But we have run out of time. But it'll be interesting to see, tomorrow most of the markets are going to open. We're going to see how, all of this impacts those markets. But it's always great having your perspective, Kelvin Emmanuel, CEO, Dairy Hills. We've run out of time right now, but thank you so much.
Thank you for having me.
Thank you. All right, so now I'm talking about the markets now. We have Anyete there. He's itching to give us the details, review from